to 300 basis points.
Okay, all right. So that is persistent management of the stocks, of course, doing very, very well. Deven Choksey of KR Choksey is joining us now to take some questions. Deven, good to have you with us here. Thank you very much. If you have a view on, persistent or Asian Paints or HUL's, which is just reported, I don't know if you're actively covering any of these, but if you do weigh in.
Hi, Prashant. Good afternoon. I think persistent, along with many of the mid-tier IT companies, have been reporting stronger numbers, and I think this quarter is no exception. They have probably reported one of the smartest and better numbers across all three verticals. So in my viewpoint, I think given the kind of strength that they are exhibiting in form of executing the business in each of the three verticals, at the same time, I think winning the newer contracts above $5 million customers, which on a sequential basis as well as on a YOY basis is on a smart rise, gives a good amount of clarity as far as the revenue visibility is concerned going forward. And given the kind of the execution visibility that one has, I would like to believe that company would be on a relatively stable wicket as far as the margins are concerned going forward, and I think that should possibly give them slightly advantage. Maybe the stock is also trading in the vicinity of around 25 times price earning on a forward basis. So to an extent, I think one can argue that yes, I think there is an element of upside available around 20% in this particular stock from current levels.
Okay, Deven, do stay on. Nigel, you want to tell us a little bit more about SAIL and what the Equirus note is all about?
Well, it's shining today, and that's because Equirus has gone ahead and increased its target price around 140 from around 90 rupees earlier. So they've upgraded the stock out there. They say that SAIL, well, that's the top pick from the sector because JSPL has already seen a bit of a re-rating post the recent run. And for Tata Steel investors may not be very enthused because of its European exposure. And we know Europe is in a bit of a trouble spot. They've mentioned a few points, so let's run you through them. One is, it's a proxy play on higher iron ore prices. They believe that iron ore prices will hold in this vicinity of around $110 odd, and we know that Tata Steel and SAIL, they're getting all their iron ore from their own backyard. So higher iron ore prices doesn't really negatively impact them. In fact, it gives them a bit of an edge. That's point number one. Second factor is they're saying the EBITDA number for FY24 it should clock around $2 billion odd, and that'll be a good number. Even if things get a little bit wobbly, they believe that that's the base case. They'll manage to go ahead and do that. They're saying that SAIL is not functioning at optimum utilization level. So as volumes pick up, operating leverage will play out. And as we know that out of the total other expenditure, the employee cost is bulk of that, which will not go up, in a drastic manner. So by higher volumes itself, they can save closer around 1,800 to around 2,000 rupees per ton. Finally, the biggest fear for SAIL over the last many years is they make money, then they pile up the debt. But they're saying there's no notable big capex that's on the cards, at least till 2025. So on that front, they are saying that the balance sheet will look far better. Put all this together, and they're positive on the stock, and the stock is doing quite well. Deven, we have heard this before. SAIL's going to do well. But valuation-wise, it doesn't get that multiple because every now and then something or the other goes wrong. What's your take on the stock at around 90 rupees?
Well, I think since the commodity prices are turning favorable for the steel companies, particularly I think India domain is producing higher amount of demand given the kind of infrastructure thrust that the government has put across. I would like to believe that I think there is going to be margin improvement because of the improvement in the price in this particular period now. Maybe the December quarter may reflect partly to it, but I think January to March quarter and thereafter, one should be seeing a higher amount of margin growth coming in. And that could possibly add to the volume growth that the company is basically driving it. In my viewpoint, I think when the volume growth and the margin growth both comes along with due to the price hike, I would think that I think that would be the sweet spot for the commodity players like SAIL. And though I agree that I think this company has always been moving in a single-digit price-earning ratio, I would like to believe that I think commodities are like this only. Probably I think when you have the opportunity to ride the momentum, I think one could trade. And that is where I think you are getting an opportunity to trade into this particular stock at this point of time.
Okay, we'll take a quick break here. Deven stays with us. 58 points lower, 60 points lower, 18,100. So holding on to that pivot for a while now. We'll come back. We'll also have Dinshaw Irani of Helios Capital to discuss the outlook on the market. He's got some thoughts on the budget, what may not be part of it, and what it could do for mean for the markets. So that conversation comes up as well. Stay with us.
Welcome back. On the way down, it's Asian Paints, which catches your attention. The stock is sold off 2.5%, post its numbers. Mangalam joins in for more. Mangalam.
Right, as far as Asian Paints numbers are concerned, it has been a top-down miss. If you just take a look at the company's volumes and value growth, both of them have been below expectations. We've seen extended rains in October impact demand for the company, and EBITDA as well as the net profit on an absolute level has been below expectations as well. What's, the better part of the numbers is the fact that there has been an improvement in margins both year-on-year as well as quarter-on-quarter. The street was expecting some moderation year-on-year despite improvement quarter-on-quarter, and the management has said that after the weakness that we saw in October, November and December picked up really well, and December decorative growth was in double digits. But if you just take a look at the numbers as they were as against expectations, 9,500 crores on the top line is what the street was expecting, 8,600 crores is what the company is posted, and as a result of which the net profit has come in at around 1,100 crores as against expectations of 1,150 odd crores. Domestic volumes absolutely flat versus 5 to 6% growth expectations, and gross margins, while they've improved quarter on quarter, we are still to see them back upwards of that 40% level. The management said that demand picked up in November and December. That is something that the street is eyeing, whether it sustains or not. But the other part of the weakness also is in their home care business, where there was some slowdown in both their bath as well as kitchen businesses, and as a result of which there was a decline in the revenues and profitability for both those verticals as well. The stock, while it's 20% off its highs, not particularly cheap, trading at close to around 52 times FY24 earnings.
Okay, that's Asian Paints for you. And Mangalam, in the press release, they said demand has picked up in November and December, but only in the month of December, they've seen double-digit volume growth. So even November, they didn't have that double-digit growth. But you're going to be tracking HUL. Numbers should be out just as markets close. Can you walk us through the key numbers that one should look at?
Well, for HUL, there are a couple of things we'll be looking at. A double-digit revenue growth is what we're eyeing this time around, and that would be on account of mid-single-digit volume growth and about 8 to 9% sort of price hike. And that's because of the price hikes that all consumer companies have taken. 13.5% growth on the top line is what we're working with, a number just shy of that 15,000 crore mark on the revenue front. The EBITDA actually grows a tad slower than the revenue, and that's because of the inflation that we've seen as well. So while there will be a sequential improvement in margins year on year, of course, it will be lower. So we're looking at 23.6% in terms of margins. This compares to 25% the same quarter last year, but 22.9% in the second quarter. The net profit, as a result of which, grows in double digits as well. 10% growth is what we're witnessing or expecting out there. Volume growth of 4 to 5%. What will be important this time around, more than just the numbers, will be what the management has to say about demand, raw material inflation, and the acquisitions that they've made in the D2C space as well. Remember, a couple of weeks ago, they did announce the investment in Oziva and another D2C company. So those are factors that we'll be watching out for much more than just the reported numbers for HUL.
Okay, all right. Thanks a lot for that, Mangalam. So we'll wait by for HUL, but we already have Asian Paints. Deven, you heard what Mangalam had to say about the Asian Paints numbers. Well, they go down as a bit of a disappointment. We have added competition as well that's coming on stream. Valuation-wise, well, it's expensive. It's always been expensive, though. What would you do with the stock post this recent correction?
Well, I think if the corrections deepen, then definitely I think there is a buy opportunity. Largely because of few reasons. One, I think the decorative segment of paint business, where the company assumes leadership, I think is basically already seeing the traction for growth. And as a result of which, I would think that I think in subsequent quarters, we are likely to see volume-led growth coming in from the business of Asian Paint, India specific. In the neighboring countries, I think where I think their export has been affected to a certain extent, I think that probably may have resulted into some amount of fall into the numbers as far as I think exports concerned. The other two business, I think the home decor business and the kitchen business, where I think the relative contribution is small. So I'm not too much concerned about that part of it, as long as I think they're making a steady progress on that front. But more importantly, I see the prospects of company returning back to stable margins going forward, because I think in earlier quarters in this financial year, they were troubled because of, I think, the high raw material cost and I think the impact on the margins, which is possibly receding away. And that is basically going to be showing some better performance going forward. As I said, that I think if the correction deepens in the price because the valuation is steep, if it deepens in price, then possibly I think this could be a buy opportunity at lower levels.
You know, the Asian Paints, of course, is now seeing not a big crack, but a meaningful one in terms of and all of it has come post results which are an hour and a half old. ICICI and Lombard is seeing more selling pressure. I mean, after yesterday's cut, it's down another 3% or so. So, you know, pre-results, I think the price was about 1270, and it's in 3 days flat has gotten down to 1160 kind of levels very, very quickly. ICICI Lombard, of course, I mean, the numbers were not terrible or anything, but for, I mean, many quarters now, there has been no significant growth as well, and I think that has been a bit of a problem area. Deven, thank you very much for joining us. Good speaking with you. Appreciate you joining in with that perspective. So, you know, just a bunch of names which we are highlighting. 60 points still lower on the Nifty, 18,100. We got Dinshaw Irani joining us.